Welcome to De-Risk, the podcast where we provide a no-nonsense analysis of stocks. Today, we're embarking on a deep dive into a company that's, it's posing a fascinating question, really a billion-dollar one. Can a stock actually be overvalued and undervalued at the exact same time? We're talking about Oklo Inc., ticker OKLO, and we'll be using our research based on data from September 15, 2025, to unpack its story for you.
Yeah, it's really something. What's fascinating here is that Oklo isn't just about the current numbers. It's fundamentally a bet on the future. And our research lays out a pretty compelling case for why this is such a complex picture for investors.
Okay, let's unpack this macro picture first then. Our research points to some cautious optimism this morning, with pre-market futures ticking up a bit.
Right, and if we connect this to the bigger picture, it's a fragmented economic landscape out there. Moody's is reporting about a third of U.S. states are actually in recession, even while giants like California and Texas show growth. So it's mixed. Today's NY Empire State Manufacturing Index, that'll be key, give us a better sense of the economic wins.
Interesting context. So here's where it gets really interesting for Oklo specifically. This company is a player in transmission, yes, but also nuclear fuel recycling. And our research highlights their bombshell announcement, a planned $1.68 billion private nuclear fuel recycling facility down in Tennessee. The goal: transforming nuclear waste into a vast energy resource.
It's a huge claim, and it raises an important question. How does that, revolutionary future square with its current valuation? Because our analysis flags the stock as overvalued. Some models even suggest negative fair values, primarily because there aren't current profits to speak of.
Right. That's the paradox.
Yet you see institutional investors like Thurston Springer Miller, they recently upped their stake by almost 23%. And 67% of analysts, they rate it buy or strong buy. Though interestingly, a lone strong sell has just popped up. It's a definite split.
A clear split indeed. So what does this all mean for market sentiment then? How's the crowd feeling? Our research indicates the options market is screamingly bullish. That's the term used. The put-to-call ratio is just 0.23. Way more bullish bets than bearish ones. And that $75 call strike seems to be a key focal point.
It is, but it's not entirely one-sided. About 11% of the stock's float is sold short. Now, what's fascinating here is that with only about 1 day needed to cover those short positions, a short squeeze could ignite really quickly if the bulls maintain control. It's truly a tug of war, or maybe more like a coiled spring, ready to pop.
Okay, a coiled spring. All right, let's cut through some of that noise and look at the chart itself. Our research breaks down the technicals into 4 pretty clear signals. What are they telling us?
Well, first, the trend. It's unequivocally bullish, trading above all the key long-term averages.
Okay.
Second, volume. We're seeing strong accumulation, capital's flowing in, no question.
Right.
Third, momentum. It's clearly accelerating, surging into strong bullish readings. And finally, volatility. There was a powerful breakout from consolidation recently. That signals a pretty decisive upward move.
Okay, trend, volume, momentum, volatility, all pointing up.
Pretty much, yes. The technical picture is strong.
All right. So weighing all of this, the macro uncertainty, the fundamental valuation questions, the bullish sentiment, the strong technicals, our verdict for Oklo is a cautiously bullish outlook for the coming sessions.
That seems right. The primary risks are definitely that fundamental overvalued assessment we talked about and, potential profit taking after such a strong run-up recently. Plus, that fragmented macroeconomy is always a background risk. But if we connect this back to the bigger picture, that $1.68 billion facility announcement, that's a huge catalyst, a powerful one, and it's reinforced by those overwhelmingly positive signals from trend, volume, and momentum, and of course, that hyper-bullish options market activity.
So what are the key levels to watch?
The $75 level, that's the key battleground right now. Bulls really need to defend that to make a run at $84 and then maybe even challenge $90. On the other hand, a decisive close below $70, that would likely invalidate the current bullish thesis.
So Oklo is really a classic battle, isn't it? A story of tomorrow versus a valuation of today. And for now, at least, it seems like the story is winning. Leaves you wondering, though, what happens next? That's all for this episode. Remember, this podcast is for informational purposes only and isn't financial advice. Do your own research or consult with qualified financial advisors before making any investments. Thanks for tuning in. Catch you in the next episode.